doomsayers like Olli Rehn, may not be Olli Rehn himself, but certainly some of his fellow officials tell us this is Europe's Lehman moment, the point at which policymakers either save the financial system or make the catastrophic error that brings it to the brink of collapse. Well, our next guest says the risk signals are flashing code red. Dean Curnutt predicted the European sovereign debt crisis. He runs Macro Risk Advisors, an advisory firm that helps investors figure out how to seize opportunities and also how to manage risk. Dean, welcome back to the Inside Track. Let me ask you this. Is this a Lehman moment?
It's certainly something that's becoming increasingly alarming from our perspective. You know, you look at, everyone's looking at Greece, and the sovereign CDS spreads are widening. There's riots. The debt to GDP ratios are incredibly unsustainable, and yet I think the bigger concern is spread widening in general for sovereigns in Europe. Portugal and Ireland are at records. They're rising every day. They become more.
Investors are pricing in greater risk, is what you're saying.
That's absolutely the case. And for a long time, the notion was that Spain is the firewall, and Spain itself, the CDS levels there, the bond levels there are rising quite a bit as well, and that's, again, it's a big concern.
We're showing everybody here right now what's been going on with Greek credit default swaps. They're up in the 1800 neighborhood. We don't see anything like that for Spain. So why, when you look at Spain, do you see a code red, or at least a risk signal flashing red?
Well, Spain is entirely a bigger economy than Greece. It's obviously in better shape, and yet if the CDS levels there and the bond levels there start to rise, there's really three things that are concerned. First is there's this interaction between the sovereign and the banking system. In Greece, the concern is not just that the sovereign will default, but that it'll take the banking system down with it, as was the case in Ireland. And again, there's the same sort of thing in Spain. The second issue is that the deleveraging creates more deleveraging, so people panic sell when they see these levels rising. And then the third issue is that the levels of rates themselves become very constrictive in terms of trying to grow out of this debt. So the economics of it become alarming as well.
We just showed everybody the difference between the price on Greek credit default swaps, 1,800 basis points, versus Spain, 300 basis points or thereabouts. And here it is again, Portugal in the middle around 800. For us to really consider this a panic situation, where do we need to see that Spanish CDS go? As high as Portugal, or perhaps not even that high?
Well, Spain got to about 360, I think, at the height of it, and this was late last year. It actually came back in quite a bit. So it's difficult to say. I think some of it's the speed with which it moves, and increasingly the speed of all these peripheral CDS levels have started to increase as well.
Okay, let's say you buy the idea that a European crisis is around the corner. Tomorrow, next week, next month, who knows? But you need to protect yourself, or you need to speculate. You want to speculate. What's the best vehicle to do it? Do you buy protection using those Spanish CDS? Do you perhaps go into the ETF market and a butterfly strategy on options? What's the best approach in your mind?
Well, we put out a note to clients yesterday that actually said specifically that we think Spain is sort of a fulcrum asset, in the sense that if Spain can be that firewall, it's containable. If it's not, the economy is so big, the resources of this stabilization facility would be overwhelmed in the instance that Spain needed help, in addition to Portugal, Ireland, and Greece. So I think buying Spanish CDS, while it's high, there's a lot of convexity, so to speak, to a some sort of event. Then you can look at things like puts on the euro. We saw last year that the widening event, the credit event last year, with respect to sovereign CDS, precipitated a significant fall in the euro and an increasing and a significant rise in volatility levels in the euro. So puts on the euro are interesting.
So effectively, bet against the euro, buy protection against the Spanish default, and you may not make it out unscathed, but at least you'll be fairly broadly protected.
That's right.
All right, Dean, always great to have you here in the Inside Track. Our risk maven, Dean Curnutt of Macro Risk Advisors.